Well, Brent crude prices have remained largely very volatile of late. In July, we had seen this $82 per barrel level, and since then we had seen an upsurge in the crude oil prices to around $97 per barrel mark in the month of October. In fact, in the start of October, and now again they have come down to around $82 per barrel. Now earlier the surge was on the back of the extended production cut by Saudis and Russia till December 2023, and also because of lower crude inventories globally. However, the recent drop that we have seen in crude oil prices is owing to fears of slowing global demand, which was triggered because of China's fall in exports for the 6th consecutive month, which means that now fears have shifted from supply to demand. Now the street is expecting that the demand could be lower, and hence we are seeing such a sharp kind of drop when it comes to Brent crude prices, because even the lower production would not be able to offset the lower demand that the street is expecting now going forward. Now, how does this lower crude oil prices benefit India? Definitely it will benefit India, because India imports nearly 85% of their crude requirement, and as per analysts, every $10 per barrel drop in average prices of Indian crude oil basket lowers our current account deficit by around 14 to 15 billion US dollars, which is nearly 0.4% of the GDP. Also, because of lower crude oil prices, if you see, the wholesale inflation and retail inflation comes down. Retail inflation is expected to come down by around 50 to 60 basis points, while wholesale inflation is expected to come down by around 125 to 135 basis points because of every $10 per barrel drop in crude oil prices. But other than the economy, there are a host of other companies that tend to benefit or lose because of lower crude oil prices. Now, companies that would tend to benefit now because of lower crude oil prices, the marketing segment of the oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL, that tends to benefit because of lower crude. Because of lower crude, the marketing margins rise for this oil marketing companies. Now earlier, when crude was at around $97 per barrel, the aggregate gross marketing margin that the oil marketing companies were making was actually in negative, which means that they were losing out money on selling every liter of petrol and diesel. Now because of this drop in crude oil prices, these margins have turned into the positive territory. On petrol, now oil marketing companies could be earning anywhere between 4.5 to 5 rupees per liter, and on diesel the margins are in positive of around 1 rupee per liter. But do remember that the crude oil prices need to sustain at these lower levels for them to actually realize these benefits going forward. However, on the negative side, for this oil marketing companies, in fact for oil refiners, there's a negative coming out of lower because of the sudden drop in crude oil prices, and that is the fact that there could be higher inventory losses. Now obviously some oil refining companies might have bought crude at $97 per barrel, but now they have to sell the refined product at around $82 per barrel, because of which there could be inventory losses for all the oil refiners like Indian Oil Corporation, BPCL, HPCL, but it could be more for pure play refiners like Chennai Petro and MRPL. Now for crude production companies like Indian Oil, like ONGC and Oil India, generally a lower crude oil prices could be negative, but given the fact that India has already imposed windfall taxes, their realizations are capped at around $77 to $78 per barrel. So even this sudden drop in crude oil prices won't largely impact the financials of oil producing companies like ONGC and Oil India. Now apart from these companies, there are a host of other sectors like paint, aviation, lubricant manufacturers, tyre, cement companies, and a host of specialty companies that tend to benefit because of lower crude oil prices, and that is because nearly 40 to 50% of their raw material prices are either directly or indirectly linked to crude oil prices, which means that if crude oil prices falls with a lag, the prices of their raw material will also fall. But again, the prices of crude oil prices need to sustain at around $82 per barrel or at the lower levels for them to actually realize some benefits because of lower crude oil prices. If they again shot up, then there won't be any benefit for these companies that we just spoke about. So keep an eye out for Brent crude prices, because a host of companies and India tend to benefit if crude oil prices remain at the lower side of lower levels, which is around $80 per barrel.